You're with us here on a fresh new edition of Trading Hour. The markets, of course, doing what it does, 18, 19 points on the Nifty, not very much going on. 27 points now. 11,490 is where we find ourselves at this point in time. So, it's all about individual stories and individual sectors rather than anything broad-based, which seems to be happening at this point in time. Take a look at Mindtree, take a look at L&T, take a look at what's happening in the auto space, a pocket like aviation and what's happening with jet. So, it's more individual and bottom-up rather than a broad-based top-down story. Like, for example, what we had last week. Much of last week, especially last Friday, when basically, the tide lifted all boats. Today, even yesterday, it's been more discerning. And it's been more selective, and maybe rightly so. We've had a spectacular run all the way up until now, and maybe now things get a little slow. We are also getting into the really crucial phase of sort of campaigning politically, candidate lists being sort of declared and things like that. So, maybe market trading will tread with a bit more caution from here out. 26 on the Nifty, but still looking pretty strong. Ekta, morning.
Hi, Prashant. Well, yes, absolutely. Well, just to substantiate the kind of excitement that our markets have seen, Goldman Sachs, in fact, has upgraded India to overweight, and now they have a Nifty target of around 12,500 in the next 12 months. And they also believe that it's a pre-election rally driven by FII flows. So that is basically the consensus in terms of the kind of upside that we've seen in the past couple of days, supported by the FII flows that we've seen all through the past couple of days, Feb 20th onwards, continuously. In fact, it's been a continuous buy figure coming in. A lot of stocks in focus, like Prashant mentioned. So we do have a lot of stocks to discuss. We have Mindtree, we have Jet, a lot of the two-wheeler stocks such as Eicher, Motors, all of them under pressure, and Hotel Leela, which is up around 5% But as of now, we have Sudarshan Sukhani joining in this morning to tell us what he's strategizing. Sudarshan, morning, over to you. Stocks as well as index call, what would you be recommending?
Sure. Good morning. My recommendation is to stay away from the index and take profits in your existing long positions. We are seeing choppy markets since yesterday. We saw an intraday decline of 100 points, and then of course there was a rally. But the markets have probably decided that they will move in a range. We don't know the contours of that range yet. It could be 11,500 or 11,550. But inside a range, trading becomes difficult and unprofitable. So the trade is to exit, wait patiently. If you see a dip towards the support of 11,400, then we become buyers at that support. Till then, we wait for a range to develop and identify the levels there. We do nothing till then. Stocks are keeping on offering opportunities. That's the nice part about being in the stock market. Something is always happening. Divi's Lab is a buy. The stock has gone through a mild correction and is now recovering and moving ahead, has reasonable momentum. Consider buying that. Then Dabur is a buy. While Hindlever is languishing, Dabur is coming out and putting its act together. That's a second buying opportunity. And M&M is a short sell. A lot of the auto stocks are in difficulties for the last since the morning, and that may well continue. So two buying ideas, one short sell M&M, and the Nifty only a buy on a sharp dip.
You ended with M&M and autos generally. Any other opportunities on the auto side? Shorting
yes.
Ideas, yeah.
Yes, in the morning I had suggested Hero MotoCorp. That continues to be a short sell. The autos are going through some difficulty. You know that better than me. And charts are suggesting that there is more downside there.
Okay, all right. Well, we have a Twitter query for you, Sudarshan. Nikhil Trivedi has 10 shares of Arvind, which is bought at 221. He wants to know if he should average or exit the share, quit.
No. I think, Arvind got demerged. And he should be getting more shares or a cash payment. One of the two things for the fashion and the engineering business that got demerged. So essentially you don't have to average anything. You are more or less your total value of the shares and that cash payout that you must have received will still be more than your cost price. And whatever you've got with you, you will see recovery and you will see better prices ahead. But check out This is a demerger and you must have received shares, and for the engineering company, some payout.
Okay, fair enough. Sudarshan, thank you very much. Appreciate you joining in with that opinion, trades and advice on questions that you send us every day.